Welcome to March, everybody. We are in a new month, and what does that mean for mortgage rates? Well, let's look at the economic calendar for the week. There's nothing going on really Monday or Tuesday, economically speaking, as far as reports go, but there is a lot going on with Iran. So we're going to say the first couple of days of the week, it's going to be the fallout from the United States and Israel taking out the Ayatollah and much of the leadership of Iran's government. That's going to impact rates. And there's a lot of people who are concerned. I certainly am not a person saying, yeah, this could be great for interest rates. Man, there are second and third order effects to a decision like this and the actions that have been taken. And while in the short term, I would expect interest rates to come down. And we'll get into where rates are at right now as we begin the week. But in the short term, I would expect interest rates to go down. But will they stay down? That's another question because, again, let's look at the second and third order short-term to long-term impacts. Well, if this continues on, if this impasse or this war, if you will, continues on, inflation will likely go up because there is a stoppage of shipping all throughout the Middle East right now. Any oil coming in and out of the Middle East is going to stop. That is going to jack oil prices up across the globe. I'm hearing 10% on Monday, boom, right out the gate. So the longer this takes, more impact this is going to have on inflation. If inflation starts to go up, guess what? Any advantage we have in interest rates is going to go away because inflation goes up. You know, anybody who looks towards these types of events to impact interest rates, I think it's really, well, it's genuine, but it's just, it's not something you control, and it's not something you should wish for, certainly on the backs of lives of many innocent people who have died. But there will be an impact short term. So that's Monday, Tuesday. Let's look at the rest of the week. The rest of the week, it's jobs week, always has a big impact on rates. And I think once we get through the initial fallout from tax on Iran, then we get into the heavy numbers from jobs week. Wednesday, we have the ADP private sector jobs report come out. We also have a manufacturing report, non-manufacturing report coming out. But the ADP private sector jobs report comes out. That will have an impact. Thursday, we have the typical initial and continuing jobless claims. We also have challenger job cuts. It's just another kind of look at job cuts across the nation. And that has been actually looked at a little more closely because really the validity and the trust that we have in the report coming out on Friday has been low. And that report on Friday is the BLS, the Bureau of Labor and Statistics jobs report. There are two components. There's the business component and the household component. The business component is how many jobs were added to the economy over the course of the last month, the month of February, right? Who knows? I don't know what the numbers are there, but I'm sure they're going to be around 100,000 jobs added for the month. The other one, which gets a lot of notice, is the household survey. And that's where our unemployment rate numbers come from. So the unemployment dropped down to 4.3% in January. Where will it be in February? The February numbers. Will it be higher? Will it be lower? If unemployment goes up to 4.4, well, that is good news for interest rates. There is more likelihood then that the Fed will lower the Fed funds rate. I think in light, and the Fed is meeting in March. If unemployment stays at 4.3%, then I don't think we see interest rates move that much. I think that's going to be a big barometer of where rates go on Friday. And we also have a retail sales report coming out month over month. So what is the consumer looking at? How is the consumer reacting to everything that's going on in markets? And really, with regards to their spending power, we already know we're over $1.3 trillion in credit card debt right now as Americans, can't believe I just said that. But that's not good news. So where are we at on retail sales? When your credit cards are maxed out, you have a harder time getting new ones, you got to put your money somewhere or you got to stop spending. And I think usually right around this time, it's the hangover from the holidays, people stop spending because they realize, oh shoot, my credit cards are maxed now. I can't pay them down. I really can't be spending more. So the expectation really is that we'll be flat on retail sales. All right, let's take a look at interest rates. You know, it's interesting when you look at interest rates. I have been emailed, texted, called on rates dropping. Hey, I heard rates are at 3-year lows. They kind of are, but they're really, and I've even heard some people say we're at 4.99 on VA. Well, those numbers you're getting are advertisements. Yeah, that's available, but not available without a cost. So this is what the average is. When you look at this chart, we're right around 5.64 on VA as we ended the week. And you can see That's about as low as it got. Will it go lower? I do kind of think it will. Will it get below 5.5? I don't know. But we'll see. And we've been down this low before. Actually, the last time we were down this low was about September of 2024. You saw we had this huge steep drop. Right now we're looking at a very gradual drop, which is good. That's the kind of drop that I want to see, not this steep drop, because look what happened. There was a big correction there. Let's look at the last time rates were this low, really this low, not February 20. We can look at February 23, which is 3 years ago. Look what happened. Rates dropped really low, 5.37, and then they shot up. So really, just because they go low doesn't mean they're going to stay low. And people who are gamblers, they are going to say, I'm going to wait for rates to get down below 5%. You know what? I bet you, I know people were waiting back here in February 23 for rates to get below 5%. Did they? No, they freaking shot up back to 6.5%. Just something to look at as we go into the week. Hey, if rates go down and you have an opportunity to lock in, you got to take advantage of that opportunity, I think, because there are no guarantees and you don't control which way interest rates are going, but you can control how much money you're going to save now and what's that cost of waiting. You control that. So don't be greedy. If rates come down, obviously lock in. So where are we at conventional? We are just under the 6%. Really, people have been talking about, interest rates dropping. Really, for much of the last couple weeks, they've stayed steady. We're right between 5.65 and really 5.75, 5.8%. So trending in the right direction. I love the slope of the rate decrease, and it should continue as we go forward. I have more people looking to buy homes right now than I have at any time in the last couple of years. A lot of people coming out of the woodworks. This is kind of a precursor, I think, of what we're going to see coming up this spring. Going into the summer, certainly we call that the PCS season in the military, when people start moving. I'm getting a lot of interest right now. And I will tell you, right now, on much of the island, Hawaii Kai, not so much. Kailua, Kaneohe, not so much. But right now, there's seller credits to be had, because there is such a large inventory. As more people start coming to the market, more offers start going in, sellers aren't going to have to give as much, if any, credit at all. So if you're thinking of waiting, I do believe the time to act is now. All right. You count the bird in hand, all right, not the one in the bush. All right, we got homes in hand right now. And remember, every 1% drop in interest rates adds 5 million more buyers to the market. That's not just Hawaii, that's across the country. And believe me, from what I'm seeing, we're going to see that moving forward. Hey, you have a great week. Control what you control. You control your attitude. Stay positive. We'll talk to you later. Aloha.